A
right.
lot of
So
shit going on
a
here.
lot of shit going on. I said, the Bank of Canada's interest rate cut, so you were right. They ended up dropping 50 basis points, as you are aware.
Mhm.
And I think that's going to be our first topic, because it's the biggest news from October the 23rd, that the Bank of Canada lowered its key interest rate down to 3.75%. The first of its kind since the pandemic. This shift could make mortgages more affordable. So I think the big question here, Vince, and I think majority of our viewers want to know what to expect. What changes do you expect to see for both new mortgage applications and those also with variable mortgage rates? How might this affect monthly payments and mortgage qualifications overall? What's your take on this?
Well, let's talk a little bit about what it did, right? Half point drop is significant. It really paints the picture that things are dire. And for the Bank of Canada to come up with a 50 basis point decrease, there's a lot of data that they're seeing that doesn't look good. So I wouldn't be surprised if there's a subsequent rate drop of a quarter to half, maybe in December. That's 6 weeks from the last meeting. So this is going to trend down for the variable rate. I think that's where people should be. We do anticipate further rate decreases going into 2025. And I think what we're going to do is we're going to start seeing CPI start coming into play a little bit again, because the dollar's starting to nosedive a little bit. We're going to see more expensive imports, which is going to drive inflation again. And it's going to create a bit of a crazy time over the next 3 to 4 or 5 months to get our footing. I'm near Yorkdale. The parking lot's not full. People aren't buying. People are really hunkering down because they see and feel what is happening. And I could suspect that people are on the sidelines waiting. The immigration issue's been in the news a lot. Government's starting to really hammer that issue because let's face it, they screwed up. They messed up. They didn't have their eye on the ball. And Nick, we've been talking about this for years, about the international student numbers that are coming in here, and these folks are coming in using that as a loophole to get permanent residency, and there's no housing. It's created a little bit of a problem in that regard, and now they're trying to fix it, and the fixes don't work. But what I do like is some of the new policies that have come about that are being talked about. Pierre Poilievre indicated that he's going to scrap the GST on new construction up to $1 million. And some people say, well, why only $1 million? Well, that basically pushes developers to build that type of home. If they could build under 1 million, which is what we need, it's going to drive some development. He's trying to spark some interest to get these developers to start building, because let's face it, Ontario, the development has just gone to zero. Like nothing is being built.
Yeah. And Vince, I want to get on that point real quick since we're on that topic. Does it not also help investors to as well under $1 million not to pay out that HST? So for those that are not aware, if you buy a condo today or you buy a product that's pre-construction on the day of closing, if you are not buying that for your permanent residence and you're not an end user buying that product, there's going to be HST that's going to be applicable on that product.
That's correct. Well, and then you get the rebate,
but you got to show that you have a rental income on that, right? To get that rebate. Because if you don't show that you're renting out and you flip it on the market, you're automatically paying that HST.
Correct.
So
and
by
the reality is,
that,
and let's point out that rebate has never been indexed to inflation. Like that number hasn't changed in probably almost 2 decades, right? It's always been the same amount.
Correct. And the rebate is also capped, I believe, at $24,000. It's up to $24,000 in a rebate. So if it's higher, you're not getting the difference.
Exactly. So, there's got to be some change, and it's good to see that these ideas are now starting to come out. And let's hope that it starts creating some new ideas to drive this market, because the reality is it's dire. Developers aren't building, okay? And let's face it, a decade ago, the amount of development charges were about 5-6%. They're now 30. on new construction.
Yep.
So the lion's share of those charges are going to municipalities and provinces. And the reality is it's not going to drive builders to build more affordable homes because it just doesn't work.
Yeah.
The consumer pays those taxes. People need to realize that the developer passes on those charges to the end user.
Mm-hmm.
So that end user picks up 30% of the cost of that home towards taxes. It's bullshit. It's absolute bullshit.
There's there's a lot, and developers are trying to get creative. I can't believe, I'd be surprised to pull out that number, and I don't have the stat on it of actually how many developers or builders have gone into receivership. And if you look at the current developers that have, very big capital behind them, that have been sitting on the sidelines, and they have certain projects that they've already started, what we're seeing from a big scale is that they're all readjusting, all on their price points. Not just for their new product, for the sales offices that they're in to try to readjust those prices. And I'm seeing price drops of $100,000 on a lot of these homes. It's the product that they've already sold and that need to close, where buyers are now coming in saying, well, my appraiser is showing that we're $200,000 less than what we paid for it. We can't come up with the difference, the surplus difference that they would have to come up with on the money to close that transaction. And they're going back to these developers and asking these developers for a reduction within the price. And the developer doesn't want to get stuck with the product, so they have to renegotiate that purchase price with them. And this is some advice for a lot of those out there is don't be afraid today that if you have a new home that needs to close, go back to your builder and let them know, get the home appraised. Because I think on all new home appraisals today, the bank, any bank today or any lender is going to want to get a house appraised, correct?
Correct. The days of blanket appraisals that have been highly criticized are over, as far as I'm concerned, at least what I see. These values are not coming in on these pre-construction projects. And some builders are telling the buyer, okay, you're going to forfeit your $120K. Like let's say you bought for $600,000, you got to put 20 grand down.
Right.
Okay. A lot of people are forfeiting that 20%, that $120K. And that builder, they're selling it for less than what the original purchase price was because they already got the 120. So they're willing to say, I'll sell it for 500 grand. And there's people biting on some deals of pre-con that have not closed. We're seeing some of that activity now because the builders already got the 20 points. They can't close. They're forfeiting it. They're going to sue them for the loss because they're not going to get full price. And then that day of reckoning comes when the builder goes after that original buyer because they haven't been able to recoup the difference. So they want to get rid of the product. A lot of builders are hanging on to inventory, which they don't really want. They want to get rid of. So they're doing whatever they can, to your point, to close. But they're not necessarily going to discount it to that value that it's now worth because everything's getting cut down. Builders are also concerned that if they do that and set a precedent, it then spoils the rest of the phases that don't have comparable sales at the original price. It just becomes a shit show. So right. I won't be surprised if there's going to be some sort of bailout coming out for these situations, because in some cases it could impact full developments. So it's going to be interesting to see how this plays out because it's going to get ugly.
We're seeing some advertisements, seeing some local advertisements on TV right now. I think from Build, the Builders Association, where they are actually now putting out advertisements so that they can speak to government in regards to bringing down those development charges and all the associated fees, so that these developers can now, not get stuck and go into receivership and go through all this process. So I'm starting to see advertisements come out, which I never seen before.
Well, Nick, everybody wants to pick on the developer, but the reality is the amount of money that they need to put out before there's a shovel in the ground is millions and millions and millions of dollars, okay? With the hope that the market maintains itself, they can build in some profit, and there is going to be demand. There's no demand for the product right now. People are not buying. So what's causing this delay? The development charges are ridiculous, to your point. They're trying to lobby to see if they could get some of this stuff back so they could provide more affordable options for buyers. But they got to recoup those costs. And when people are trying to pick on a developer, I think you got to put the glasses on and look inside to see how many reports they got to provide, how much red tape they got to deal with, how many studies and summaries and review engagements and all these type of reports. We're talking 30, 40 reports for development. And it's just bureaucracy. We never had this before. We never had this level of bureaucracy at different stages of the process to prolong these developments for years and years and years. And guess what? At 7-8% interest, at 10% interest, which is probably reasonable for raw land financing, you got a lot of costs in financing that also gets built into the price. So when you delay, time is money, and that interest cost to carry those parcels, whatever amount it is going to cost the buyer at the end of the day, because that builder is going to want to recoup all their upfront costs. And that risk, there's risk there. Now they're seeing the real risk because they can't sell.
And I noticed five easy builders right now throughout the GTA, two specifically in Vaughan, all went up on the market. Sales offices flopped, not one sale transaction. Relaunched the product 2 months later by reducing the price $100,000. Fails again, right? And now they're at the point where they are offering 2.5% for 12 months VTB if somebody was interested to go and buy their product today. And I've never seen it this bad. If you look at the condominium pre-construction right now, parking lots were selling in the city $60,000, $70,000 at one point in time. If you inside the contracts, if you wanted to assign a deal before it closed, there was a $5,000 fee. Lockers were an additional charge. And now price points, they're also now reducing 50, 60,000 and negotiating. And commissions have never been higher for realtors, offering 6% commissions for us to bring our buyers there to their sites to see if we can help them sell it. And what we're seeing is that parking lots have now been reduced to under 10. I've seen parking $10,000 and you can buy up to 2 parking spots. Lockers are now free. Assignment fees are free. You have the rental option during the interim to rent it out before registration, which was never the case. They never even wanted you to do that legally. Now they're allowing that to happen to get some movement in the market. So they're trying everything. But unfortunately, I don't think there's only so much that you're going to be able to throw at it, because the bigger there has to be bigger decisions coming from all levels of government to really start making changes within this market so that we can help stimulate to get people back in. And I said this before, and which I think, Pierre Boulevard is on a very good running a very good campaign, and his policies that he wants to implement if he was elected as prime minister of this country would actually really make some good significant changes. And I'm seeing that, and I'm not, I right now, I don't want to talk about my political beliefs, but I like that. I like what I'm hearing right now. And I feel like, that voice, that change that could be approaching, which, is taking way too long, but could make the real big difference into really making movement within our real estate market.
Well, Nick, a year ago, this time, there was all this hoopla and excitement about the Housing Accelerator Fund. A lot of attention towards the billions billions of dollars that were being handed out to municipalities to accelerate the development and permit process. Hasn't happened. Waste of money. Some municipalities gave the money back and said, we can't do it. We can't meet the obligation. Oakville, the council voted against it, send the money back. So now you got the immigration issue that's on pause. No one's coming in. They're going to halt it because they totally fucked that up. Okay, like it is bad. And we have a government that's just spinning around without a rudder, without a paddle, in the ocean, just not knowing where they're going. They have no plan. And we have to wait. We have to wait another year until the election comes for there to be any movement, because they don't have any capability of figuring it out. And I think we're just going to be in a pause situation until we have a government that steps up and says, okay, we're going to make some changes. This is what we're going to do. This is how we're going to attack this problem. And you have to free up the federal government to come up with those ideas, because they got the lion's share of the revenue in this country. You know, they're the ones doling out cash to the provinces. They're the ones collecting the most amount of taxes. They got to figure it out. And I just don't see how this current government is going to behave proactively, reasonably, when there's so much infighting. They don't have any trust in their leader, and you have a mutiny internally that doesn't even want this leader to be around anymore. So we're in a stalemate. We're stuck, right? And what Canadians are going to have to realize is I don't think anything exciting is going to happen over the next little bit, other than there's going to be goodies thrown around, and spending is only going to cause inflation, and inflation is not good. So we'll see how this plays out, but I'm not optimistic.
Well, the only thing I could be optimistic about is that next year is an election year, and I think he's going to want to make certain changes so that he can try to bring back voters on his side, and hopefully we can start seeing some real change and real progress. That's far few and in between, but that's something that we're going to have to really kind of wait it out and see. But what I want to get into is, we talked a lot about developers. We talked a lot about, pre-construction right now. There's a lot of things that me and you have talked about within this show that is now finally coming to fruition, and a lot of the viewers that have been with us for some time will understand it. I want to talk a little bit about the resale side of things right now, and the really what's happening there from that perspective. And we are finding that with the 50 basis point drop that just took place, it is helping certain buyers to get off the fence. And what we've been noticing is that this has been a tug of war act between buyers and sellers, where buyers right now we're just sitting waiting it out, because they hear from media reports and from different outlets that interest rates are going to continue to drop. And they're thinking right now, well, why get into a product right now when we can still lock into a lower rate come the next 2 or 3 months, and then we can lock into that lower rate at that point in time, and we'll get into the market. As you know, buyers buy mortgage payments, and we're getting sellers at this point in time having the same situation where they're saying, well, if interest rates are going to drop, that means home values should go up in price point. Why am I going to sell at a lower price now if I'm in no rush? I will just wait this out until the spring, and I'll sell in the spring to gain more value. So what I want people to understand is that if you are an end user within this market, and there's really no big difference in regards to interest rates, because at the end of the day, if interest rates do go down, values will go up, and that means you're going to be buying houses at a higher price tag. And that means you'll also be selling your house at a higher price tag. If you are buying in a low market, that means you're also going to be selling in the low market. That'll average out itself. And that's what we're finding within the market, is that a lot of end users are turning over what sales or what transactions are happening in the marketplace. We got about 23,000 homes of inventory right now. So that's a lot of kind of just some back end stuff, is that we are still selling on the resale side of things. But specifically, for those that are either looking to upgrade or to downsize within the market itself. But the phone did start ringing a little bit more. What is that? And I want to go back to understanding that the 50 basis point drop was just on the variable. But I was talking to a lot of people that were waiting for this rate because they had a closing that was waiting to take place after October the 23rd because they wanted to lock into a fixed rate, but their fixed rate still maintained to stay at the same rate that it was. I think one client that I had a fixed rate of 4.3 or 4.4%, and they were hoping to close after October 23rd as the rate dropped, but the bank never lowered that rate. Yeah. Can you explain why the fixed rate didn't move?
Yeah, the fixed rates are not moving. It's primarily the variable rate that is, which kind of works not necessarily in lockstep with fixed rates. And the play right now is you take the variable and watch it come down. It's going to continuously come down. And then when the bond market is impacted, the bond market is looking at a lot of different things. Like the bond market is controlled by a very small group of bond traders internationally, right? And they're really looking at more than just real estate. They're looking at oil. They're looking at conflict. They're looking at the risk of war. They're looking at the global picture from a 35,000 foot level. And that's how they determine what bond rates and yields go, like what moves them. Right. So it's not necessarily what the Bank of Canada does. The Bank of Canada is trying to move the needle on floating rates. And you got to remember, in business, there's a lot of operating lines. There's a lot of business loans that float, okay? So it's not just the residential mortgage business that they're concerned about. They're concerned about industry. They're concerned about sectors of businesses that rely on operating facilities to run their businesses. So we're not seeing the change in drop in fixed rates, and nor would you see them move in lockstep. So for those folks that are waiting for the fixed rates to drop at the same level, it's not going to happen. It will eventually, but it will not come at the same proportion that the variable rate is coming at. Like, you have to remember, when we were at the lowest point in variable, when it was like a 1.5%, it was like 245, less a point. People were getting variables at 1.45%. The 5-year was at 279, right? Like, when the first increase to the Bank of Canada rate happened, it was almost double the variable rate. So people were reluctant to lock in. So at that time, people were like, well, I'm not going to lock in. I just went from 145 to 170. I'm not going to lock in at 279, 289. Why would I want to pay more? And sadly, when that went up, the fixed rates went up, right? And they couldn't catch up. And then all of a sudden, they lost that opportunity. So people just got to be aware that this is pretty good. Some of these fixed rates are good if you want to be into a 2 or 3 year. We're recommending short-term fixed rates if that's what makes you feel good. But the variable, I think, is the play right now. We're seeing a little bit more interest, and a lot of more savvy folks understand that if they could stomach the higher rate temporarily, you're going to be able to lock in at some point in time into hopefully high threes, 3.99 rate. That's where I think we're probably going to settle in the spring. And that's a pretty good rate overall. Like, at the end of the day, from a historical trend, if you could get a 5-year fixed rate under 4%, that's pretty good. That's excellent. Yeah. So can't be greedy. We're not going to see 149 and 279s anymore. Those days are gone. And I hope I'm wrong, but I just don't think we're ever going to get there again. We're going to see some ugly in the next little bit. You're going to start seeing some really tough job losses after the Christmas season. And that's something I think is going to really take a lot of people by surprise come the new year.
And I agree with you on that, and I want to get into that. But that was some wonderful advice for anybody who's going to be watching this show. And that if you are a buyer, whether you're a first-time home buyer looking to get into the market, I believe there's some first-time home buyer incentives that are going to be coming out very, very shortly, if I'm not mistaken, Vince, in the next 15 days.
And Nick, if there's one thing I will add,
yep.
If you're a buyer, I think you guys sit down with your realtor and you want to ask the realtor, those properties that are listed, when did the owner buy them? Because if they bought pre-2016, 17, and not in 2019, 2020, 2021, you probably got a lot more wiggle room from them on their sale price. Because if people bought in 2020, 2021, they're trying to recover what they paid for. And there's not going to be a lot of wiggle room because you're going to lose money.
Mm-hmm.
And psychologically, sellers do not want to sell something losing money. So you're going to have a lot more of a tougher grind negotiating. Whereas if you have somebody who's been in their house for 10, 15 years, their cost price is X. If they bought this thing for 450 grand 15 years ago, they're more likely to let it go at 950 than someone who bought at 950 and is trying to get $1.5 million, $1.2 million, right? So dig a little deeper into when that seller bought, because you might have less friction on negotiation.
I want to give some advice to realtors out there that are watching the show. Be careful what you take on and how you evaluate these properties.
Yeah.
Do the back end research on them, and if you are going to take on a listing, make sure that you're pricing it to what market value is. And Vince, I can't tell you how many, and not that I want to, and I never want to walk away from business. Don't get me wrong. I don't want to come out of this as looking arrogant in any way possible. But I'm just trying to say is that when I'm going into listing appointments and these sellers are now interviewing 4 or 5 agents, and agents are now just, doing whatever they can because they're desperate, they need the work and they want to take on the business. One, they're undervaluing their commissions and undervaluing themselves. But number 2, to take on that listing, they're taking it on at a price that is never going to move on the market. And all you're going to do is throw bad money over bad money. Today, still, the cost of staging is still very expensive. To enhance the curb appeal of the product still costs you a lot of money. The marketing campaigns with twilight shots and aerial photography and it's not cheap anymore. Your time that you got to put in and the staffing behind it and the brochure, there's a lot of expenses that you got to take on. Realtors need to be careful, and that's why there's a lot of realtors that are leaving the business at an enormous rate right now, because they're just not going to be able to ride those through this. Hey there, homeowners. Nick Oppedisano. From the time from when I listed, when I went to go and evaluate the property itself, and I'm like, there's no way that I could be that off on price. And for that agent to want to go take on that listing and put all that money behind it, there's only one major motivating factor behind that, and that's him working that client to get a price reduction over the time frame.
Yeah.
And that never bodes well for the seller, because at the end of the day, he'll end up selling that house in a bad market less than what I even appraised for it today. And this is the situation that we're finding within the market. If you look at the inventory today, 25,000 homes available to choose from throughout the GTA, I would say 80 to 85% of those houses are all overpriced, and agents are just trying to work this price point down and down and down. And it happens on my team, and these are really good, hard conversations that I have, because there are people out there that need to be told the truth and need that money because they're in a bad situation and they need to get out of it. And by delaying it for them never bodes well financially within their pockets. So just, be careful, really just be careful on one, who you get as a realtor, and realtors, be careful on the business that you actually truly take on.
And right now, it's an interesting time because we're heading into, November, December, close to the Christmas season. And the last thing you want is to listen to somebody who promises you more than what the value is, and now people are trekking through your house during Christmas, right? Mm-hmm. You want this to be as painless as possible. The market's the market. The market's going to dictate what your home is worth. The multiple listing service lets everybody see it. Mm-hmm. If there's value there, and remember, the buyer's in control in this market with 24,000 listings out there. They're going to understand what the value is. Now, there's certain pockets that demand more, and there's always those little neighborhoods that everybody finds desirable, and they'll maintain. There might be a few bidding wars from time to time. But for the most part, if your house doesn't stand out, the market's going to determine what it's worth, and you have all the stats to tell people what it's worth. Mm-hmm. So why beat around the bush? This is what it is. This is what you can expect. 25,000 more or less. This is where you're going to be. And a lot of people don't like hearing that, sadly, because their house is their castle. And people have to come down to the reality of what this market is. It's a buyer's market. You're not in control. You're going to get conditions. You're going to get financing, inspection. It's changed.
And the little things matter. I went to a listing appointment this morning, and again, it was she was interviewing realtors, and she goes, "Oh, I said, "Do you mind? I'm going to take a look around the property. I like to always just take a scope of from the exterior first, and then walk inside and take a look at from the inside." And what I noticed from the exterior side of things is that she had a walkout step, and all these I almost tripped over it. It was a hazard. And they were all loose and wobbly, and there were big tumblestones that you have to walk down to get to the walkout backyard, because the grading ended up sloping down. When I walked inside the house, everything was meticulous, and she goes, "What do you think?" And I said, "Well, I think we have to really just address a lot of the landscaping outside. And inside, you have it meticulous. Everything seems to be very well maintained, but I would really work on fixing some of the landscaping issues that you have there." And she goes, "Well, that's funny." She goes, 3 of the agents that walked inside said I shouldn't even bother with it because somebody else is going to rip that out anyway and redo it. I'm like, well, I don't know. I have a difference of opinion on that. One, you don't want to get into a lawsuit and have it a tripping hazard and become a liability for you. But number two, today, buyers are going to be very finicky. They are going to address every single issue inside that home because they don't want to have any additional expenses once they close on it, because things are too expensive today. So
Nick, there's a great example of a few realtors who provided advice that wasn't for the time.
Correct.
Right?
Correct.
That is advice when it's a seller's market.
Yes.
Right? When there's not enough supply, people will say, "I just want a house, I'll deal with that later." Today, when they got 23,000 homes to choose from, they can make that decision. No, if I'm going to buy a house, I don't want any problems. I don't want to spend any more.
Correct.
And that's clearly a situation where the realtor hasn't assessed the market.
Yeah.
Right.
And I think he's worried about, maybe out of cost, funds for that seller, or maybe time frame because they want to get the business now and not giving them the right advice because they want to get this house on the market as soon as possible and not have any delays and wanting to close them in and sign on the listing. But at the end of the day, you gotta be so finicky on making sure that even if you got loose, dripping faucets in your house, get them fixed. Gotta fix them. Remove any distractions or buyers are walking in with checklists. And they're saying check mark X, and they want to make sure what needs to get done. And if it doesn't get done, or there are things that need to be done, then they're coming in at a big price reduction on you because they're putting their evaluation on what it's going to cost them to fix it. Remove all that from the equation. Do a pre-home inspection prior to that house getting listed on the market. Fix those issues before it gets listed. And then you'll find that it's going to be a smoother transition within this market, and it creates so much more value.
Spend the time to find a good realtor. That's the key.
That's the point. Yeah, I hear you. Vince, I think we're at 45-minute mark here.
All right.
I know you're leaving. When are you back?
I'm back election night, U.S. election night. Hopefully I'll be able to fly over and there won't be any riots and civil wars going on when I land that night. So should be an interesting weekend.
We'll miss you. Be safe, and hopefully you get a return flight back.
Let's get back at it next week, and let's see what happens with the TREB numbers, because the TREB numbers should be out by then. I'd be really interested to see what lands.
Yeah, October 6th for sure. Yeah. All right.
Alrighty.
Thanks everybody for tuning in.
Thanks, Nick, and we'll see you soon. See you next week.
Next week. Take care. Bye-bye.